Hello everyone, thank you for joining us. Go ahead and wait a couple more minutes, allow everyone to get joined in, and then we'll get started right away. All right, well, let's get started. So hello everyone, my name is Dylan Richards. I will be hosting this live webinar. What we'll be doing is our market forecast, market look ahead, what we're going to be expecting for this week, what we're anticipating, and what's important to us going into this coming week of trading. So we'll do our usual top-down analysis, intermarket analysis between dollar interest rates, so we can get a feel for risk on, risk off, and then we'll go into the assets that we trade, that being indexes, Forex, and once in a while I get asked about gold, silver, oil as well, so I'd be happy to take a look at those markets as well. So with that being said, let's get started. So starting here with the daily chart, or with the dollar on a monthly chart, we see price has dropped down into a discount relative to this dealing range here. And this is something we've been looking at for a while. We are still long-term bullish dollar, given what we are seeing on a monthly, weekly time frame. So just to keep this in mind, I know we have new viewers in here as well. I am expecting the dollar to reach 120, 121. I do have my eyes up here on this buy-side liquidity pool. So just having that in mind on a higher time frame makes navigating the lower intraday time frames much easier. So here now, let's dive into the dealing range and price action we're in now. We've rallied higher. Price has came off those lows and dropped down into a discount. We are inside of this, or we traded inside of this monthly fair value gap, and then we've rejected it strongly to the upside. So based off a monthly chart, I am expecting further upside continuation given the reaction we had in discount. No body candles were able to close below it, and as soon as we touched it, we immediately sprung higher, delivering to premium objectives. With that being said, let's drop down into weekly. Okay, so last week, I remember we left we all off with bullish dollar. So the reason we had that bias going into last week, and for those of you that are new, we always like to look back before we look forward. So whenever we are trying to make a prediction for the week, we need to look back, see what's happened, what's transpired, and that'll give us the clarity we want going into the week. So here we have a weekly fair value gap. Let me zoom in on that so you can see that. So the gap between this candle's high and this candle's low is our fair value gap. We see price traded down to it on the weekly, and this was our objective when we were bearish dollar looking for discount objectives. We've took out this short-term low, sell-side liquidity, and have delivered to this weekly fair value gap. Price hit that level and immediately rejected it. So that gave me a bias of bullishness going into the past few weeks. And then I left you all off with, I want confirmation that we are continuing bullish. And I outlined what that confirmation would look like. We have a fair value gap in here. And let me mark that out. So when we were going into this week, and then, or the previous week, and then going into this last week, I shared with you all that I would not want to see price get slow and lethargic inside of this fair value gap. I would want to see price rally through it with speed and show no respect for that level to get the confirmation that we are on side, and we are currently in a buy program for dollar, and we have received that confirmation. So as we see here, price rallied through this fair value gap. And last week, the target I left you guys with for dollar was the 50% of this wick, which is the 104.771 level. So about here. This was the objective on the upside for dollar last week that I was looking for, and price reached up to it and was just shy of that level. What I do want to take your attention to going into this week is we are seeing confirmed continued bullishness on dollar. Here we see price drop down, took out previous week's low, institutional order flow entry Joe, which is a partial entry into a fair value gap that doesn't even get to consequent encroachment. So it taps into that fair value gap and immediately reacts higher. And this is what it is that is occurring in institutional order flow entry Joe is high frequency algorithms that are employed by smart money or informed speculators. As soon as it's hitting that fair value gap level, it's hammering buys, buys, buys. And then what that does is allows them to get long inside of a fair value gap for them price to rally higher. So just looking at the order flow from the previous week going into this week, we saw previous week's low taken out, price dropped into a discount array, and then immediately rallied higher off that. So that does bode well for continued bullishness going into this week. For the dollar, my objectives on a weekly chart this week will still be the 50% of this level, so the 104.771 level, and then this buy side liquidity above this swing high here at the 105.631 level. So that will be my upside objective on the dollar for buy side liquidity. Dropping into a daily chart now. We took out the sell side liquidity below this low, and then we found support inside of this bullish order block. This down close candle in here before the displacement higher with the fair value gap makes our order block. Price traded down into this order block, and then we saw a strong reaction higher, displacement, shift in market structure here. And as I shared, that wasn't enough for me to confirm that we are bullish and entering a buy program. I wanted to see more information. And what I shared with you all that was here we have a fair value gap in blue. And then I'll mark out this SIBI in here, sell side imbalance, buy side inefficiency. So we have two overlapping fair value gaps as we see here in the blue shaded region and in between those two black lines. So what I shared with you all last week is I would want to see discount arrays support price higher if we are going to continue bullish order flow. And then as we see here, price traded above it, and then price traded down into it once, rebalanced this price range, immediately left it. And then here we see the open of last week. So if we are expecting a bullish week, what would we anticipate that looking like? Well, so okay, here's Monday, our open. Price trades lower. This is the manipulation of the week. We take out previous week's low, so we accumulate that sell side liquidity, and then price rallies higher, making the low of the week on a Tuesday, and then rallying higher into our premium objectives. And I left you all last week with my upside objective on the dollar, which was the mean threshold of this order block. So that bearish order block. So that would be the 104,629 level. And let me put a trend line on that so you guys can see that. Okay, so this black line here is our mean threshold of this bearish order block, and I said this would be one of my upside objectives on the week, and I would want to see how price trades inside of these levels. So we see price hammered that level perfectly, and then price traded off the lows. So going into this week, I will expect continued upside as long as we continue to find support inside of discount arrays, that being here we have an order block here. This candle here would be our order block. Let me take these off now. So this would be our order block. Why would I use this one and not this one as the order block? Whenever you're selecting an order block or a bullish order block, you want to use the lowest down close body candle. So I will expect price to find support inside of this level going into this week. Why wouldn't I want to see price go below the swing low? Because if we are bullish and we're going to continue reaching for premium objectives, it has no reason to come down below this low. Why? Because this low already did the work of taking out this sell side liquidity. So the sell stops have been purged here already. So I don't see any reason for price to want to go below that if we are bearish or if we are bullish. So for my discount objectives that I will be looking at to find support and that I wouldn't want to see violated, number one is the order block. We have a wick in here. So the consequent encroachment of this wick, the 102.902 level would be the consequent encroachment of this wick, and I would not expect these levels to be violated if we are going to be bullish. So on the upside, my objectives for this week, here we have relative equal highs, buy side liquidity. So other than the mean threshold of the weekly wick that I shared with you all, my second objective on this week will be the buy side liquidity above these highs. And then if price wants to get animated on the upside, we have a volume imbalance in here that I've shaded in blue that price will want to drop into. So those are my upside targets. And another thing I mentioned in regards to reading order flow, measuring order flow to get high probability bias. Here we have a bearish breaker. So the last down close candle before the move that purges sell side liquidity and shifts market structure. So this would be our bearish breaker. So a question I get is, why didn't price react here and drop off and go lower if this is a breaker? Well, the most important element into all this is narrative, understanding narrative and order flow. So the order flow is now bullish. We're in a buy program. What's a buy program? A buy program means discount levels are being supported. Here we see the fair value gap find support. We have a volume imbalance here as shown by these two black lines. Note the perfect respect for these candles. No bodies were able to close below it. So that's very indicative of bullish order flow. So this was my confirmation that we're in a buy program, and a buy program means discount arrays are supporting price and price is continuously reaching towards premium arrays, that being levels of interest above market price. Being the mean threshold of this order block going into this week, I will expect this buy side liquidity here to be cleaned out as we continue bullish. So that's what I'll be looking for in this week, and that's why it's so important to measure order flow and not just put random points of interest on your chart without any context, because people could have gotten tripped up, and I did receive some questions about how come this breaker didn't hold, and it's simply because you need to look at narrative, order flow, and determine what state of delivery we're in, and that state of delivery is clearly a buy program for right now. So that's what I'll be looking for on the dollar. I believe I shared my objectives for that. Let's go into the interest rate market now. Let me take off my notes for that. And then do all this here again with you guys. Okay, so going up to a weekly chart on the interest rates. Why was I confident looking for buys or longs in the dollar? Because the interest rate market is what gives me my inside edge into what to expect in the dollar index. And that's why I'm able to call the dollar with very high accuracy. And for those of you that have been with us for a while, you guys know what we do. So here, looking at this fair value gap on the weekly chart on the 10-year yield, specifically a discount fair value gap, measuring the dealing range below equilibrium. So similar in the dollar, how it reacted off that monthly fair value gap and discount, we want to see how discount arrays, or how price reacts off discount arrays, to be able to get a measure or a feel for the order flow. So here we see this weekly fair value gap in discount. Price has hit it a couple times and the wicks went through it. But remember what I shared with you guys, we want to look at the bodies. As ICT teaches, the wicks are where the damage is done. The bodies tell you the true narrative. So note here how the bodies were unable to get below this level. That's how I was able to expect continued bullishness in the interest rate, which then gave me the confirmation that, okay, we are going to be bullish dollar. The other confirmation I gave you guys last week as well is, let's look at the 30-year interest rates relative to the 10-year. So here we see the 30-year yield was unable to make that lower low. Let me show, okay. So here we see the 10-year yield made this lower low here, ran out the sell stops. Why did I trust this as a stop hunt to go higher and not as a move lower to continue? Because the SMT confirmed that. So the smart money technique, smart money tool, was my indication that this was just a stop hunt and that we should expect higher prices, with confluences within the daily chart that I will show you, but this is additional confirmation into my analysis that makes what we do here high probability. So also on top of that SMT, as I noted, the bodies were unable to close below this key level. Dropping down into a daily chart now, bonds have been delivering beautifully. All three of our upside objectives were delivered to this week handsomely. Why don't I trade bonds? I don't know. That's a great question. I was thinking about it. The intraday charts are really spotty for bonds. That's why I wouldn't trade them, but I do use them as a barometer for my analysis for the dollar and indexes. So here we see the, let me leave that on there so you guys can visualize that SMT. So this is that SMT here where the 30-year yield was unable to make lower lows. What else do we have in here? We have a bullish order block. Price traded down into the bullish order block once, twice, reclaimed order block, and then price rallied higher. So once we saw this market structure shift here in bonds and price traded up through this bearish order block, that was indicative to me that we've now seen a change in the state of delivery, and I wanted confirmation that we were going to continue higher. And that confirmation looked like this for me. Volume imbalance here, bodies of the candles aren't touching. Note how price traded into it, hits that level to the tick and rallies higher off that level. So that was my indication that, okay, we are now in a buy program. Remember what I just covered on the dollar. What is a buy program? That we are seeing premium objectives be delivered to. I shared with you guys my targets on the upside were this swing high here, this swing high, and then the external range liquidity of this level. So those levels were delivered to beautifully, seeing bullish order flow, support in discount levels. So this is how I was able to be confident in my calls that I am giving you guys into these previous weeks, because I have bonds as a confirmation. And another thing to keep in mind is we are giving these forecasts and outlooks before the Sunday open, and the Sunday opening gap is always key to have in mind, as we will never know where the gap opening will happen. It's completely outside of any tools we would have to predict. So we have to let that gap opening happen, and then from there we can start reading and gauging sentiment. So that's just something to keep in mind, to factor in everything we're sharing with you all with the Sunday opening gap. So price has delivered bullishly here on the interest rates. Buy side liquidity was taken, so that made the dollar rally easier, and that is what put pressure on foreign currencies, euro, British pound, yen pairs, as well as the index futures. So my upside objectives going into this week will be a fulfill of the sell side imbalance, buy side inefficiency, SIBI. I will look at for the 50% level to be traded to. So about we'll just call it the 4% level. So my upside on the 10-year interest rates will be 4%, and then eventually a fulfill would be the 4.061. So that'll be my upside objectives on the interest rates, and that will support my bullish bias with dollar and why I am bearish on index futures and foreign currency. So for my euro, British pound, Aussie dollar traders, I will continue to anticipate lower prices in foreign currency based off everything I've shared here. And of course, for my index S&P and NASDAQ traders, I will continue to expect lower delivery on those assets given everything I've shared here in terms of risk on, risk off. So I will be anticipating continued risk off. Okay, looking at the index futures market. So something to keep in mind here for index futures, we've been in a choppy consolidation since February 1st, really. So since the 1st of February, we've really been in a tight range. I am looking for that to break out as not that I'm a breakout trader, but I am looking at it to break out of this range since we are seeing dollar start to pick up some steam and start moving towards objectives that will start being reflected in other markets. But because the dollar was in consolidation for so long, we'll see that reflected across all assets. So looking at the S&P now, as we were moving higher, our targets were these relative equal highs, buy side liquidity. That was delivered to beautifully. Why was I able to expect a downward expansion week this week? Well, because we see buy side liquidity was taken in a premium. We have a swing high form above the relative equal highs. So that, not all the time, but most of the time will be a dead ringer that we are going to see lower delivery with all the context and criteria in mind that I've just shared. So something to keep in mind is we have purged buy side liquidity, and there is an SMT here between the Dow. So the Dow was unable to make this higher high here on the weekly chart, and higher time frame SMT confirmations should not be neglected. They should be a key part of analysis, because when you see SMT on higher time frames, it's a strong confirmation. So here we see, comparing the highs here, the Dow was unable to get above this high. So that's another confirmation I had that I was able to trust lower prices into this week. And another thing that allowed me to trust sell models in the index going into this week was the buy program we are in on the dollar. Dropping down into a daily chart now. Well, let me share my objectives here on a weekly. So I will expect continued lower delivery on indexes. As I said, though, keep in mind we are in a consolidation. Once we start breaking out of this consolidation with speed and the dollar picks up directional clarity, the indexes will start moving again with the clarity we typically have with them. But right now we have to trade within the consolidation and market profiles that are given to us. So given the S&T buy side liquidity being purged here, I will expect downside delivery on the index futures. My first target on the weekly chart will be the 40.42 and a quarter level, which would be the 50% or consequent encroachment of this wick here. And then assuming we continue to accelerate lower, we have a bearish order block here, that I will expect to be delivered to on the downside. And then if price does begin to get steam and start moving with speed and accelerating below these levels, my final objective on the weekly chart would be the consequent encroachment, or the 50% of this wick, which would be the 39.45 and a quarter level. And that'll be valid for me as long as this high here stays intact. So I would not want to see the 50% of this wick, the 41.78 and a quarter level, should not be violated as well as these wicks. I would not want to see those overtaken if we are going to see bearish delivery. So what invalidates those discount objectives I gave is price rallying through these premium objectives. We can open up, trade into it, reject it, that's fine, but I would not want to see price open and trade through them with speed. Dropping down here into a daily chart now. So relative equal highs, swing high on the daily formed above that. That was additional confirmation to expect lower delivery. As I said, we have been in a consolidation since about February 1st. We've been in a chop. So we need to keep that in mind going into this week. Since I will be bearish indexes because of my bullish dollar risk on analysis, risk off analysis, that is. Looking at the S&P right now, we have two volume imbalances here. So I'm going to mark out one in blue, and then the other one here with black lines, so we can see the distinction between them and you guys can see those levels. So here we have several premium arrays. We have the two volume imbalances in here, and we have a bearish order block right here. This candle would be the bearish order block. The last up close candle before the displacement lower, fair value gap. So my three premium objectives on this week that should not be violated if we are going to be bearish would be the two volume imbalances here and the 50% of this order block. Or just look at the wick. Since it's a big wick order block, we'll just look at the wick. I would not want to see this wick overtaken on this bearish order block if we are going to continue lower. So going into this week, what could we expect? Price open up, trade up into these premium arrays, get weak, and deliver lower into sell side liquidity. That's what I will favor. Before I get into my objectives for the week, looking at last week's order flow, we saw Monday open up, Tuesday make the high of the week. Why could we expect Tuesday to make the high of the week? Because we're looking for the dollar to make that low of the week on Tuesday. So since these assets are inversely correlated, we can use them to get a bias within each one. And then we saw lower expansion throughout the week, taking out previous week's low. So even though it wasn't the cleanest week technically, our bias and our analysis was still right on. We're just waiting for this consolidation for us to break out of this consolidation so we can start getting nice trading days with nice ranges, and we don't need to worry about choppiness, positions turning on you quickly, and we can have nice positions that deliver to objectives promptly. So since we do have these several premium arrays above us, two volume imbalances, order block, two volume imbalances here, price should not rally through these levels if we are to be bearish. So looking on the downside, my objectives for this week will be the sell side liquidity below this level, and then below this level. And then if price really wants to get animated, we could potentially see this low taking out. However, I'm not favoring that. So looking at this week, where did price make the low of the week? Look at this bullish order block. I took our attention to it last week that this would be a key level to monitor. So the 40.57 and 3/4 level would be right here. Okay, so beautiful delivery last week below previous week's low, sell side liquidity into this bullish order block, the consequent encroachment, a sensitive level. Price hit this level and then rallied higher off it. So going into this week, I want to see how we open, and I want to see how we trade inside of these premium arrays I shared with you all, and I will expect lower delivery. What invalidates that is if we start trading above these levels with speed, then I will look for these relative equal highs to be taken out and potentially deliver into this liquidity void where there's no trading. However, I am not favoring that. So with that being said, that's my analysis on the week. So in summary, risk off, dollar bullish, foreign currency, index is lower, and I am expecting interest rates to continue rallying, which will help the dollar rally and put pressure on all other assets. So with that being said, now I'll turn the floor over to you all for questions, and I'll be sure to get those answered. Okay, I have a question about how to determine intraday draw on liquidity. Okay, so the question is, what criteria do we have in mind when we set price objectives for the current day? And if you think that in this case, time is a main factor. Okay, yeah, let's look at the S&P market, and I can show you some examples of this. Absolutely, so time will always be a factor. It's always time first, then price. So yes, you may have an attractive price level, price may be at a PD array, but none of that matters if we're not in a kill zone or the proper time for that to happen. Why do we emphasize time so much? Because those are hours of the market where there's higher volume. So higher volume facilitates transactions to be able to go through the marketplace, and that's why smart money, or what we refer to as the composite man, they are operating during those hours because there's plenty of liquidity during those times. So it's always time first, then price. So time is always going to be a crucial aspect of any part of analysis. So how do we go about setting intraday price objectives? And what was the second part? Yeah, so price objectives for the current day. So let's just look at Thursday and Friday's trading this past week. So if we were expecting lower prices in the indexes, which we were, and I've outlined the logic as to why, dollar made the low of the week on Tuesday and rallied higher. So what will that do? It'll put pressure on the index markets, and then we saw a nice decline into Thursday and Friday after the CPI manipulation took place. Okay, so how do you go about defining intraday price targets? All your intraday price targets will be derived from the daily, or from the weekly, daily, 4-hour, and 1-hour chart. So those four, mainly three, daily, 4-hour, 1-hour, you will derive most of your price objectives for. And then if you're in the 15, 5, 1-minute chart, you're able to get really precise entries, but you want your draw on liquidity or your magnet on price to be derived from the daily, 4-hour, or the hourly chart. So let's just look at Thursday's trading, for example. It was a nice expansion lower. Where could we have expected price to deliver to? Well, we are bearish, and as I outlined, why? Because we were bullish dollar. So a reasonable downside objective for this day would be the volume imbalance in here that is formed. It's an inefficiency that price will look to redeliver to. So here we have a volume imbalance. So what would that look like intraday? So remember, these two black lines are our volume imbalance. So if we're trading intraday here, we are expecting lower prices. So we're going to want to look at a hourly to develop our bias. So here we see we have relative equal lows here, and we are already expecting lower prices. Remember, this high is Tuesday. So we will expect this high to be intact. Why? Because it's likely to make the high of the week, as dollar made the low of the week the same day. So the draw on liquidity for this theoretical example would be the swing lows here and here, because there's sell side liquidity below those relative equal lows. And remember, these two black lines are the volume imbalance, or the inefficiency that we would want to look at as a draw on liquidity or intraday price target. So I'm sure we're not trading on a hourly or 4-hour chart unless you're a swing trader. So specifically for intraday trading, to answer your question, so our targets from the hourly would be, in this example, would be the sell side liquidity below this low, and the sell side liquidity below this low here into the two black lines here, which would be the volume imbalance. So now how would we go about trading this on our intraday charts? So now that the objectives have been defined on a higher time frame, now you can go into your 5-minute, 4, 3, 2, 1 minute charts and start finding entries and nailing them down to get nice risk to reward ratios on trades. So here we have the European London session. I personally don't trade it, but this is where the movement happened for today. So this would be a kill zone. So this is how you incorporate time, then price. So here we have the prices identified in the form of sell side liquidity and the inefficiency. So now how do we go about blending time into our analysis? So now we want to look for these trades to transpire during a specific time. What times will that be? The kill zones, London being 2 a.m. to 5 a.m. and the New York session being 8:30 to 11:30 in the morning. So here going into this trading week, this is Thursday, and remember the context we're in. You need to do it top down, and that's how you get clarity and high probability as we demonstrate here consistently. So we've already likely put in the high of the week. The dollar is bullish, and we have identified a drawn liquidity from a higher time frame. So now how do you go about incorporating intraday elements to trade the higher time frame drawn liquidity with intraday charts? So now we want to just look at our simple entry patterns. So here we see the open of the London session. We see a manipulation higher, taking out buy side liquidity, relative equal highs. So who's accumulating that buy side liquidity? Smart money is selling to these buyers. And then we see a displacement lower, market structure shift here, and then we have a fair value gap and order block. So this is the 2022 model for many of you that recognize it. Buy side liquidity taken, displacement, market structure shift, entry on the fair value gap, and then you could enter short there and ride it lower into the objectives that I outlined that you could have anticipated with all the logic and context in mind that I've shared. Let's say this entry, you weren't able to get it. Well, we are expecting lower delivery to continue. Here we have an order block, displacement through the open of the order block, change in the state of delivery, that confirms the order block. Price trades back into it once, twice, that's another place to short sell. Price is delivering lower continuously, and this is a 5-minute chart. There's many more entries on a 1-minute chart, but we see here displacement, fair value gap. A thing you can use fair value gaps for is many people think that, okay, once the move started, the train left the station and all you can do is watch it. Well, you can use fair value gaps to get in sync with a move that's already in motion. So this would be another valid entry here inside of this fair value gap here. Why? Because the drawn liquidity hasn't been met yet. Remember, we have our eyes down here because smart money is going to need to offset their sells here and close them out with buys at a lower price. So that could be another entry, all using drawn liquidity from a higher time frame. So I hope that answers your question as to how to find price objectives. And this is just an example of how I would look at it and internalize it. So I hope this has given you enough to be able to go inside your charts now and start looking at these and studying them, because these phenomena, these ideas repeat every single day. So you'll have plenty of study material to look at. And if you would like for me to clarify something further, I would be happy to do that. Thank you very much for your question, Soren. And then I got a question about light crude oil futures, elite. Yeah, let me take a look at that for you. All right, so doing a top-down analysis here on crude oil, we've been in a pretty choppy consolidation. And as I've shared with you all earlier, because the dollar was in a consolidation for so long, that'll reverberate throughout all markets. So Forex, index markets, commodities will also reflect what is going on in the dollar. That's why it's important to analyze it and why it's a critical part of our pre-market prep and market forecasting. So here, looking at the weekly chart on crude oil, we are in a consolidation, so really not much information to be gleaned from this time frame. So let's drop down into a daily chart. So I was looking at crude oil a couple weeks back since we saw this displacement higher here, and I was looking for some kind of entry or bullish signatures inside of these discount levels, being the fair value gap or this volume imbalance here that is on a weekly chart. But because, or this volume imbalance here actually. But that's not a trade idea. That's just a setup that could potentially form. And since price traded down into here and then kept driving through it, there was no trade. There was no entry. That was just a potential setup that I was looking for. And I am still going to be bullish crude oil in the future. Just because of really fundamentals. There is real fundamental drivers behind commodities. I personally don't think fundamentals way too much in other assets. I think most of the data is falsified anyway. I don't think it provides much value in terms of analysis, but I do know some traders that incorporate fundamental analysis in their trading and have success with it. So looking at the crude oil market, so we did not see a reaction bullish inside of these discount arrays as I was expecting. So price delivered lower here and took out sell side liquidity. And then after that, we saw displacement higher, taking out a swing high. So now we've seen a market structure shift on crude oil. And then price has traded down into a discount of the recent dealing range we formed inside of this daily fair value gap. So moving forward, if we do find support inside of this daily fair value gap and rally higher, obvious draw on liquidity to me will be these relative equal highs. I absolutely do think we have unfinished business above here at the 82.90 to 84 level. So I'll just say the 84 level. I do believe we have unfinished business above there in crude oil. I'm just not sure as to when it will want to deliver that. So looking at price now, as I've said, we are in a daily fair value gap. Price has traded into it, and then we saw price trade off the lows. Going into this week, if we do, let's look at hourly real quick so I can have some more clarity on them. Okay, so yep, measuring the dealing range again, as I've shared. Price has traded down into a discount, taking out sell side liquidity, and then we've seen a reaction inside of a discount array, being the order block in here. We've seen other bodies were able to close below that, and then price has rallied. The only thing that has me skeptical on wanting to long crude oil right now is the fact that we are bullish dollar. Risk off translates into commodities as well. So because dollar is very bullish, that will make it hard for commodities to rally as well. So even though we do have those relative equal highs on the crude oil futures market, and I do think we have unfinished business there in the future. However, with dollar being bullish the way it is, I wouldn't expect that to be delivered to anytime soon. So unless we get some kind of reaction here inside of this discount level that shows bullishness and a market structure shift, we see discount arrays start being supported, I would be interested in taking a crude oil position. But as of right now, nothing in here speaks high probability to me. And because the dollar is so bullish, it will make it hard for crude oil to rally. I hope that answered your question, Elite. All right, let me check the group chat real quick, see if we have any more questions. Hey, David, I see your chart on the daily from the dollar last week. Yes, sir. Beautiful delivery last week. Objectives hit, and all with the logic and order flow that we discussed pre-market. So well done with that. And as you said, that was helpful in your euro and British pound trading, and I'm glad to hear that, brother. So speaking of that, let me take a look at the euro. I know we have quite a few euro traders in here. And then if we don't get any questions in the chat till then, I will close up shop, and then as always, I'll keep you guys updated throughout the week with points of interest that I'm seeing and new developments that may occur that I'll take everyone's attention to. So here, looking at the euro. Okay, so looking at it on a weekly chart, really just the inverse of the dollar. We have a bearish order block in here, this up close candle before the displacement lower with a fair value gap. That's key, that's what qualifies an order block. We see price traded into it, and then you guys can see here my mouse is on the mean threshold, which is the 101 or 1.10650 level, the mean threshold. And note how the mean threshold was not traded through, which is indicative of weakness. So this is another way I was able to anticipate and expect lower delivery on the euro markets. Okay, got some questions in the live chat as well. I'll be sure to get to those. Okay, so let's wrap up the euro analysis. So yep, we weren't able to trade up the mean threshold of the weekly order block, indicating weakness. So that's another way I was able to anticipate lower delivery here on euro. Downside objectives was this weekly fair value gap and this down close candle, bullish order block. Prices traded into that nicely. My downside objectives on the euro this week will be the 105.637 level, the consequent encroachment of this wick. What would invalidate that for me? Here we have a fair value gap on the weekly chart for euro. As long as price stays below that and the consequent encroachment of this wick here, I will expect lower delivery going into this week for euro, and that's in concert with our risk off analysis that I've shown you all with interest rates and the dollar index. Looking at the euro here, this fair value gap that we were looking at these previous few weeks were delivered to, rebalanced nicely. Now that we are inside here, let me put that back so you guys can see that. So now that we have traded below this order block, or this fair value gap, and we're back into it, I will want to see this act as resistance. I wouldn't want to see price trade above this swing high. Why? Because this price range has been balanced. So many of you were probably looking at this fair value gap here, and okay, why did it want to come in and rebalance all of this? We'll look back a few candles. The paint, using the paint roll analogy, has been applied efficiently through this price range because sell side, buy side has been offered, and then we left this price range. So this is now a balanced price range. So now note, look at where the high of the week for euro was. It couldn't rally through this swing low. Why? Because it's a balanced price range. So that's why we wouldn't expect this fair value gap to get filled completely because of this logic here. So here we see price traded up into a premium level, balanced price range, price rejected it lower, and then we took out the sell side liquidity and the bearish order block that I had taken our attention to last week. So bullish order block traded into nicely. So going into this week, I will want to see this high remain intact, and I will want to see lower delivery. So my downside objectives on the euro will be the mean threshold of this order block. So for your notes, 1.05734 level would be my first objective for euro. The second objective for euro will be the 1.04822 level. So that's what I'll expect going into this week for the euro. For the new week profile, what profile can you expect to see? Yeah, that's a great question. So let me take a look at the economic calendar. So we have a bank holiday Monday, and then Tuesday we have high impact news drivers. Okay, so we have high impact news drivers every day this week. So we have the Fed meeting minutes on Wednesday. Okay, so the meeting minutes will be the big event for this week. So since we are in a consolidation, I think we could see a similar weekly profile that we did see last week for indexes. Let me make sure you're asking for indexes. James, just to give me the confirmation on that, you were asking about indexes, correct? Okay, so yep, I'm assuming you are asking for indexes. So yep, so the weekly profile last week, it was Tuesday, high of the week, consolidation profile with expansion into Thursday, Friday. So consolidation week, expansion Thursday and Friday was the template for last week. Why could we have expected this weekly profile for last week? Well, because we had CPI on Tuesday. So we expect Tuesday to make the manipulation. And because we are in a consolidation, looking at the ICT templates, we have a consolidation week with expansion Thursday and Friday, taking out the sell side liquidity and swing low. So since we do have a FOMC minutes on Wednesday and high impact news drivers throughout the week, and also Monday, it's a bank holiday. So that's another reason why I'm expecting a potential consolidation week with expansion into the latter part of the week. So potential manipulation higher into Tuesday, maybe Wednesday, depending on what they want to do with the minutes. But I will expect the major expansions on the weekly chart to occur on the Thursday and Friday, and potentially initiate on Wednesday after the manipulation. So we'll have to see how that plays out. So gun to my head, that's what I'm expecting. However, it can do whatever it wants. It can open and just rip lower from the open, and that's always a possibility, but that is what I'll be expecting. So a similar profile to last week, with majority of the expansion taking place after Wednesday into the latter part of the week. So DK, do I normally use or do I normally have the US dollar and 10-year charts open to confirm bias during live trading with ES? Absolutely, yes. So I have multiple monitors, so I'm constantly referring to the S&P, the NASDAQ, and the dollar. Interest rates, not as much. I'll check them once in a while during the session just to make sure, okay, they are rallying or dropping, and then that'll give me the confirmation I need. But yes, and let me actually show you an example of why that's useful and how I trusted it this week. So let's look at this previous week. And yeah, when we pull up examples to show things, I like showing you guys fresh examples. No one wants the analyst that has to go back 3 years to find the perfect example, right? So okay. So here we have a rally higher into Wednesday. How could we have expected this low here to just be a stop run to then continue higher? So we can actually look at the dollar index to confirm why it was that we were not seeing continued expansion lower on the index market. So this was Wednesday at 10 o'clock. Wednesday. Okay, 10 o'clock. All right, beautiful. Okay, so looking at this on a intraday basis, so look at pull up the 5-minute. So here at 10 o'clock, so here we have the 10 o'clock hour. Let me mark that with the line here. So here we have the 10 o'clock hour. Here we see the dollar was failing to make higher highs here, right? While the indexes all made lower lows. S&P, NASDAQ, and the Dow made lower lows here below these lows. But how could you have treated these or expected these being suspect lows and that it was just a stop run to go higher? Well, that's why I use the dollar to confirm that. So I have an additional tool like smart money to tell them when these things are likely to happen. So a crack in correlation or a change in sentiment will likely occur in the dollar first, and that's why it's always important to reference the dollar throughout the day and intra-session. So because the dollar was not printing higher highs, as the index markets were printing lower lows, this tipped me off to we could potentially see these being suspect lows and price rally. What also tipped me off to that, just in this specific example, was the relative equal highs. We see a high left in place there, here, and here. So price, if it is going to go lower, it's not going to go lower and leave those highs. It's more likely to reach higher, accumulate that buy side liquidity, and then deliver lower. So there was multiple factors of how I knew this was a suspect lower low, and I used the dollar to confirm that. So I know you didn't ask how I use it, but I do use it intraday, and that is how I use it in my intermarket analysis while I am trading indexes. So I am constantly referring to it throughout the trading session. And then I got a question, do I use the 8:30 and midnight New York open? Absolutely. So every day I mark out, that's one of the first things I do when I open up my charts. I see, okay, how do we trade through London? I mark out my midnight and 8:30 price level. Midnight gives you more power 3 feel for the daily expansion. 8:30 is more to measure Judas swings for the AM session specifically. So you can use 8:30 and 9:30. I personally use both of them. On days when there's news at 8:30, I'll use the 8:30. But when there's no news drivers, that morning, I'll just use the 9:30 opening for my trading session. So just to keep in mind, or for your notes, you want to use power of 3 for the daily accumulation, manipulation, distribution on the daily expansion, and you want to use 8:30 or 9:30 for the AM session or morning session opening price to set a minimum threshold for a Judas swing to determine that in your intraday trading. Awesome. So I believe we have covered all of the questions. Let me double check. Yes, I believe so. Awesome. Well, thank you all for sharing your time here with us. It's greatly appreciated. I hope that you guys found value in all this. And as always, feedback is greatly appreciated. If you could please also let your other associates and trading partners know what it is that we offer here and share. And if you guys found value in this, be sure to give us a thumbs up and be sure to share some feedback. Thank you all very much for sharing your time with us. Have a great week and good luck trading. Thank you.